knows. He is the managing director at Land Coal Trading. Todd, to me, there's a new market regime out there now, right? You got to look at things a little bit differently, knowing at least we think these tax cuts are going to be extended to 2012.
That's right. That is actually an ancillary concern that investors need to consider, especially even for the professional traders out there. When you start incorporating and looking at your investment models, you have to start thinking about all of these other actions that are taking place in Washington. This tax deal is actually a really big plus for the markets, and it probably will continue until well into 2011. However, summertime by 2012, we're going to be talking all about it again.
Yeah, and so, not to get too political with you, but, you know, the Democrats are saying on one side he caved. On the other hand, though, if this works and jumpstarts the economy, you could argue this is his ticket to re-election.
Well, I've been saying that all along, though, Tracy. I mean, we are the economy is down so much that we really only need a couple of big positive marks to come out of Washington, out of the Fed, even out of the stock market. And then you're probably going to see the president get reelected in 2012, regardless of the $1 trillion health care reform bill. I mean, none of that is really relevant, because when you start thinking about the improved wealth effect, and you really see that with the Federal Reserve, as long as consumers are spending, and if the employment picture can improve even slightly, that's going to be a big plus for President Obama going into that re-election.
I mean, at this point, you know, he's given away the farm. It's got to get better, right? So even increments of better pretty much secure him a re-election, unless the Republicans come up with some dynamite candidate, which at this point we're not seeing.
Well, you're right about that. But going forward, though, when you start thinking about what is being manufactured as far as the wealth effect, as well as actually improving the idea that people feel richer right now. I mean, keep in mind, the Federal Reserve, by going out and doing quantitative easing, too, and then you had Chairman Bernanke over the weekend actually talk on a program on Sunday evening that actually said that he will go back and do even more Treasury asset buys. And if that's the case going forward, you can only think that that's going to improve the wealth effect. And you really think that is one of the most powerful prospects for U.S. consumers. And we really saw that in September and October in retail sales. We saw it during the Thanksgiving Day weekend. People don't have any money. People are out of work, but they're still spending money. They feel wealthier. They feel richer, and they feel happier. And therefore, those are probably the ingredients that are going to get President Obama reelected in 2012.
Yeah, again, at this point, the bar is so low, anything's better, right? All right, so let's talk about this market.
Okay.
We still have European contagion. You know, we have Conor McShane in Ireland right now. Ireland's got to pass this budget or they're not getting their bailout money. We have a lot going on. Are you still worried about all that hurting us here at home, or are we kind of turning the corner?
You know what? I don't think it matters right now, Tracy. I'm calling this the Burger King market. You can have it your way, any way you want. Because no matter what, we always have superhero Bernanke who's going to save the day. He has been very vocal about making sure that more money goes into the risky assets for stocks, and that's going to improve that wealth effect I was just talking about. So no matter what happens with the rest of the world, you're still going to have the Federal Reserve pumping a lot of money into the economy. It's purely manufactured. Whether it's right or not is completely irrelevant, but it does help stocks, and it's going to help stocks well into next year. So right now I'm thinking that no matter what, if you have unemployment go into deep double-digit territory, that doesn't matter. The Fed will step in. Or if you think the economy is going to improve and unemployment drops to 8% and more people are working, that's even better for stocks. Stocks are going up no matter what. It doesn't matter what's taking place in Europe. It doesn't matter with the geopolitical concerns in Korea. Let's forget all of that right now. The Santa Claus rally is in place, and it's going to continue until 2011.
But the problem with that, though, is, to your point, we don't really get fully why it's rallying, right? I mean, a little bit of smoke and mirrors that we're going up, and then you have this whole momentum play going on, and you might as well get on the boat or the train or whatever you want to get on, or you're going to miss the whole thing. So, but what happens when the realization hits that it might not be all that? Does it come tumbling down?
Tracy, you're spot on with that comment, because eventually you're going to hit a brick wall. You can't continue to have QE 3, 4, and 5 and keep borrowing and spending and everything else that's taking place. Something has to give, and it will eventually give. But I tell you what's going to really start the bear market, though, for investors. When you start seeing quarterly earnings, when those quarterly earnings reports, if companies start missing on the bottom line, not the top line, but the bottom line, that's when you're going to really see a prolonged bear market. And then we're all going to to wake up and say, oh, yeah, I guess people really do need to work to actually grow the economy. But right now, it's completely manufactured by what's coming out of Washington. Everything's happening with the Fed. And you have to think that companies on the bottom line, they're not hiring. So margins are actually improving, especially with inflation concerns because prices go up. So then you have to start thinking those companies will continue to beat on the bottom line. The top line, though, is obviously the wild card. And we already saw it in Q3. You only had 60% of S&P 500 companies beat on the top line. That clearly is a signal of cash flow problems. But investors are ignoring that right now. They're only focusing on the bottom line.
Yeah, and your point is a good one because the bottom line keeps growing because we keep cutting, and eventually I think there's nothing left to cut. You got to turn the lights on at some point. Just quickly, I want to still go over, you still loving the travel and leisure sector? Hyatt, Marriott, Delta, Southwest. You got Ann Taylor in the retail space, huh?
Love Ann Taylor right now. A proxy for a growing economy is actually the sale of women's dresses. And if you look at the past 2 months, we've actually had month-over-month increases, double digits in the teens of women's dress sales. What happens in that? The theory is like this, Tracy. You have the woman of the household tends to be the accountant of the household. So she's going to control all discretionary income. If she goes out and spends money on maybe Little Billy and buys the outfit from Gymboree for the class picture, she's going to spend any excess cash out there on herself. You're seeing that right now. Women are by spending money on themselves. Ann Taylor has actually been the best beneficiary of that sector right now. It's up over 90% for the year. So that's the winner of the entire retail sector, and it will probably continue.
It's good stuff. And of course, too, TJ Maxx, all your, I guess, lower-end retail shops, Walmart, still going to do well going forward.
TJ Maxx opened its third store in Manhattan. Think about that. I mean, they're competing with Tiffany's and all the other ones out there. TJ Maxx, of all companies, the frugal future is clearly here.
Todd Schoenberger, I love talking to you. And this story will continue, but you're right. Probably will see an up market till the end of the year, if not into January, that's for sure. You will certainly be back before that. Todd Schoenberger, Managing Director of Land Colt Trading. Thank you, sir.